Joining me now, JP Morgan Asset Management Chief Market Strategist for the Americas, Gabriela Santos, and Slate Stone Wealth Chief Market Strategist and Trader Extraordinaire, Kenny Polcari. Gabriela, adjusting portfolios, should that begin right now for our viewers?
Yes, and perhaps even a few months ago, but it's not too late to adjust it now. I think the word of the press conference was recalibration for Chair Powell in terms of bringing rates closer to neutral. I also think investors should recalibrate portfolios for a rate cutting cycle. What does that mean? I think if you think about the savings side of the equation, you had very juicy cash yields for things like CDs and 3-month, 6-month treasuries. Those are coming down fast now that the Fed truly is cutting interest rates.
Okay, so which part of the yield curve do you say people should go in?
We think there's no need to go too far to the other side. I very much agree with your previous guest that the long end shouldn't come down much more. It's really short-term yields coming down.
So what, 3 to 5? Or?
So really a sweet spot for us is 2 to 3 years where you can lock in the income as short-term rates come down. And you can count on that in the future, should there be more of a concern about economic growth, a little bit of a protection in case of a recession.
I mean, so 3.632% for the 2-year yield right now?
It's off the highs. It's off the highs. We always want the price we used to have when yields were closer to 5%.
Right. Can we see the 3-year? I'm interested to see what the 3-year is doing, but go ahead.
And it's been fascinating. Really, since
April. We have a 5-year.
We've had 5 months of consecutive yield declines in anticipation of this. So you've had 8% return from your more intermediate core fixed income. So might have missed a bit of that, but I still think the risk is really around cash rates coming down, and at least you can lock in the actual income for a little bit longer. But it's not the whole solution.
Kenny, give me your gut reaction to this move. People are trying to figure out what it really means.
Well, so first of all, I think that he caved, right? 25, I think, was the number. Well, had been the number I've been calling for.
He caved to what? He caved to the rest of the voters, at least the greater part of the voters.
He caved to the traders. He caved to everyone that was putting pressure on him. Congress, Lizzie Warren, everyone putting pressure on him to cut, because they had to cut. I think it was. So I think he caved. So I think it was too big of a move initially, but it is what it is, right? Now I think he made it very clear that he's remaining data dependent, but the path is lower. Come November, come December. I think he kind of indicated that potentially there's another 50 basis point rate cut coming either in November, December, which again, I think is ridiculous. I was looking for 325 cuts in September, then November and December, and not 350 cuts. I think that's way too aggressive, and I think that sends a very different message. I know that he's trying to tell everyone he doesn't know anything. He wants to stay in front of the ball versus behind the ball. But I think if he keeps cutting at the rate at 50 basis points, it's going to send a very different message.
Okay.
That being said, we see the markets all over the place, right?
Except the Russell.
Actually think
I mean, the Russell's gorgeous at the moment. It's up 15 points or 2/3%. Right. It's actually off the highs, but still, would you go into some of the small caps, or is it a little bit too late? Gabriela says you still have about 6 months to really, let's use the term, recalibrate.
But not necessarily to small caps. But yes, go ahead.
Yeah, but I got to tell you, I don't, recalibrate or just put new money into sectors that are underrepresented. So when someone says recalibrate, to me, that means sell this and buy that. To me, it means take new money and putting in those sectors that may, up till now, have been underweight or that are going to benefit in this cycle. So look at things like utilities, which have been the star performer this year, really at the top of the line. The most boring sector in the world is now the greatest performing sector almost this year. I think it's in the number 2 spot, actually.
Does it shock anybody that the Dow is now flat to slightly negative?
No, and I actually think it's going lower by the end. But before this is over, I think they're going to end in the negative. Not hugely down, but I think they're going to end negative today and then move lower tomorrow.
It's been a tricky last 30 minutes of trading, usually during these Fed press conference days. It usually trades down, and then tomorrow we'll wake up and it'll kind of resume a more sustainable trend.
I think equity world. Talk to me about equity world.
And so here's where some recalibration, we mean either putting new money to work or just recalibrating within the market, because it's been all about tech, really for a year and a half now. And what you're starting to see when there's a bit more confidence that the economy can stay on track, that there are proactive rate cuts, is you start to see other sectors do well and do better. So things like today, industrials, energy, banks. So really you start to see cyclicals do do a bit better than your pure tech or defensive sectors. So a rotation within, but large caps. Small caps, we think it's way too early still. It's not quite that kind of Goldilocks environment.
Kenny.
Listen, I agree with most of what she said. I like small caps in a lower rate environment. I think small caps actually will continue to lift their head. They have lifted their head nicely. I think they'll continue to do that. And I think you also have to look for names that are big divvy payers. Names like in the energy industry, you want to look at something like Energy Transfer. That's got like an 8% yield. Do you realize that? And it's the best in the business in its class. And so I think that's where money's going to look for opportunities in some of these stocks that are paying higher yields. They're not necessarily as sexy. Don't go chasing the tech, but there's plenty of opportunity in other parts of the market.
I need to look at Bitcoin here. This is really interesting because it was earlier above 61,000. Right now, it still looks pretty good. It's 60,263. There were predictions, folks, that if it were a 50 basis point cut, Bitcoin would dive. That appears to be completely off the table at the moment. Okay, Gabriela and Kenny. Great to have you. Thank you.